Welcome back, folks. You are looking at a chart of gold on a weekly time frame. In this video, I wanted to introduce to you how I do my higher time frame analysis, okay, and get a gauge on what might be the potential draw on liquidity at this point in time. So I'll always start with a weekly chart, okay, and then kind of just start to mark out my key levels. So right now, what I can see on this current weekly chart is this volume imbalance, okay, where we've had two candles pass each other, right? And no body candles between those two pieces of price action, okay? So that is known as a volume imbalance, okay? If you look at, for example, let me just scroll down. If you look at these candles as they pass through each other, there's body candles between the candles, okay? In this case, these two candles have passed through, however, there's only wicks between them, okay? So in that case, the draw on liquidity is most likely going to be back up to the close of this candle, right? Back up to the close of this candle to balance this volume imbalance, okay? And then that will be the premium PDRA, at which point I would expect price to reprice lower into a discount PDRA, which we have down below on this weekly chart, and that is the fair value gap that I've been speaking about for quite some time now, okay? And that's that 2470 level that I'm still looking for. So now let's jump to a daily chart, okay? Now on the daily chart, we can see we have our bearish order block, okay, that the market has been trading up into, right, up into. Notice how the volume imbalance is also right at that level, okay, from the weekly chart, that line that we drew, this one. We are getting alignment, confluence, okay, with this bearish order block. So one can assume that that's where we are headed back up into this bearish order block, okay, which is going to be our premium PDRA aligning with the volume imbalance on the weekly chart, okay. Second, we can see relative equal lows on the daily chart right at that fair value gap premium 2470, okay, that we can see from the weekly, okay. And so that's another confluence of where the market will be drawn to, okay, after hitting a premium PDRA, okay. And then I will drop down to a 4-hourly chart and look at other confluences, okay. So let me go back to the daily. We haven't spoken about this yellow line. That yellow line is the midpoint of this wick on this daily chart. These wicks are the same as gaps, right? ICT says to treat these wicks as gaps. And I've just marked out the midpoint of that wick on this daily chart, and that's what that yellow line is. Again, look at the confluence there. It aligns with the weekly volume imbalance and almost reaching up into where this bearish order block is on this daily chart. Okay, so there's a lot of confluence up in that area, and so price is going to be drawn to that level. So going back to the 4-hourly chart, we see that level, okay? We see above where that level is, the weekly imbalance, the midpoint of that wick on the daily chart, we've got some relative equal highs, okay? A lot of people are going to be short from there. And we also have these equal highs up around in that same zone of price, okay? And so high probability that that equal high is where we will tap into, maybe wick into there, and the bodies remain within this purple line and this yellow line, which is where the bearish order block is and that weekly volume imbalance is, okay? And that on this 4-hour chart aligns with what we expect, because this 4-hourly chart has taken liquidity, okay, which is a low, referred to as external liquidity, and then the expectation would be that this now moves to internal liquidity, which would be this fair value gap, okay? And that aligns with the weekly imbalance, the daily wick CE midpoint, and these equal highs, okay? These equal highs are also important, okay, because if we go down to a 15-minute chart, we have taken out the current low of the week, okay? Yesterday's trading has taken out the low of the week, and expectation is once that occurs, the market should trade back up to and take out the high of the week, which is that blue line, okay? And that's shown here on this 4-hourly chart as well, right? That's where those equal highs are. So there's a lot of alignment. That's how I kind of paint myself a picture of where I believe the market is going based on all those things that I've spoken about in this video. Now, there's no guarantees. That's just an assessment, okay? You've got to have an opinion. And that doesn't mean that I will take a long, okay, because the range is just not there, right? And this is premium pricing. I don't want to be taking longs here at the highs. I'm already long from yesterday to low of the week. I've still got some positions on, okay? I've already taken off a piece of that, okay? And that was journaled yesterday, and I did a video about this trade yesterday. But I still have, as I mentioned in that video, some positions on targeting the high of the week based on everything that I've mentioned in this video. Notice that on this 4-hourly chart that all these highs are lower. This is a lower high compared to the previous high. Okay, this is a lower high compared to its previous high, and so that is going to be low resistance. Okay, so the market will find it very easy to go through those highs. Okay, and on top of each one of those highs, they're all swing highs, right? There's going to be buy stops. Okay, so as this market has moved down through this low, okay, anybody short have moved their stops to this previous swing high. Okay, so there's a lot of buy stops at that level where existing smart money long holders can offset their positions because they're going to have willing people who will buy at that high, okay, from smart money. Okay, where smart money can offset their longs, meaning they can sell to willing buyers at premium pricing. Okay, so that's how I analyze the market. So if I wasn't in this position right now and I saw all of this, I would wait. I would wait for the market to do what we have assessed it to do, right? Because this is all at high price levels and we're basically inside the range of an existing move. Okay, so from my assessment, which is just my opinion, that can be wrong, the market has answered two of my questions. One, where has the market come from? And where is the market going? Where has the market come from? Well, we've just taken liquidity, right? And that is liquidity at the low of the week. Where's the market going? Well, it's now seeking the same in the opposing end. It's going to take liquidity and or rebalance a level of inefficiency in the opposing end. And that's this current move that's on the way, right? So there's no trade setup here unless we have a pullback potentially into this rejection block. That would be the only thing that I would look at. But then if we're down here, we might just take out these relative equal lows. But again, it comes down to time, okay, and price behavior at that level if we are going to get a move down there. Okay, so the market has answered my two questions. Where have we come from? We've come from taking the weekly low, taking liquidity. Where we're going? Well, we're going to seek the same in the opposing end, some level of inefficiency or liquidity above. And that will be these equal highs, all these highs where resides above liquidity. Okay, and back into this inefficiency. So if we trade back up here, we're basically back into this inefficiency. Okay, so that's how I do my analysis. It doesn't take long, right? 10 minutes is all it's taken me while I'm talking to you and explaining it to you. So probably only would have taken me 5 minutes if I was just doing it on my own. Okay, just jumping from higher time frame down to lower time frames, identifying key levels, marking them on my chart, and then trying to paint myself a picture. The key question we need to answer is, what is the potential draw on liquidity? And that's got to be based upon where has the market come from? What has it done? Okay, it's just taken liquidity, which is a key level weekly low. Okay, and now it needs to seek the same on the opposing end, internal liquidity, as well as these equal highs, which is going to be liquidity and stops residing above. And then maybe it continues to do the same on the opposing end, right? But that's thinking too far ahead. Okay, we know there's liquidity down below, as I've explained on the higher time frame, but we don't want to be thinking too far ahead right now. We're just interested in what is the current potential draw on liquidity. And there's a lot of liquidity sitting above. Okay, this is all from last week. These are all equal highs, a lot of stops sitting above. Okay, so that's how I analyze the market using high time frame and just jumping down to lower time frame. But now I'm just waiting. If I wasn't in this position right now, I'll just be waiting for the market to come into some level of premium. Then I would assess what is the market doing at that point in time. How is price behaving at that point in time? For example, at these highs inside of this fair value gap. Okay, what's price doing when it gets there, and what time do we get there? For me to then assess if I have a setup or not, because I know what I need to see for a setup. If I'm going to be looking for what price is doing at this premium pricing, I'm going to be looking for my short setup to go back short. Okay, down to liquidity or inefficiency below. But I know what my short setup looks like. I know what my long setup looks like. In my video that I did yesterday, okay, that spoke about this trade, I gave you one of my long setups that clearly shows you exactly what I need to see for me to long the market at the low of the week. That is what I need to see for me to long the market at that price point, low of the week. Okay, so I've given that to you. I've taught that to you. You need to study that. That could be what you need to see when you're at the low of the week expecting a reversal. Okay, that's what I mean when I say I know what I need to see for me to short this market at a premium price. I've given you an example of what I need to see to long a market at discount pricing. Okay, and that's what you need to identify. What do you need to see when you want to enter a market that's going to be moving in your direction? Okay, so you've got to go back and you've really got to study the charts. Go back and look at every time the market has taken a weekly low, what has it done. Study that. Identify that. Come up with what you need to see for your setup to identify that type of a reversal from low to weak to high to weak. Go back and study what has the market done when it has reached the high of the week and reversed. Study that chart. Identify for yourself what you need to see. What's your setup, okay, to go short or to go long. Okay, so I hope the video is useful. I will now talk with you in a future video.